Assalamualaikum and hi. My name is Nawwar Mansor. So today I will be the first presenter for my group. I will present about the definition of synergy. So what is synergy? Synergy is when two or more things work together for the effect of greater than the sum of their individual effect. It is also expressed as the whole is greater than the sum of its part. So, synergy happens when two or more groups combine together for a better result of their operation, for their operation. It is also the potential ability of individual organization or group to be more successful or productive as a result from the merger and acquisition. Okay, now let's discuss about the types of synergy. There are three types of synergy. The first one is revenue synergy. The second one is cost synergy, and the third one is financial synergy. These three types of synergy have a different objective. So first one, let's look at the revenue synergy. Revenue synergy is the merger and acquisition companies will focus more on selling their product. So, for example, company A and B are in the same business line will merge together and try to aim for the same market segment. Next is cost synergy. Cost synergy is when the merger and acquisition company want to reduce costs. For example, company A and B merge together and then they share the same marketing channels in order to save their costs. This will result in a better marketing result since uh, they merge together and they have a good cost in order they have a good contribution of they have a good contribution to make the marketing. So the third one is financial synergy. Financial synergy is when the two medium size combine together for a financial interest. So we can say that when the company A and B merge together, they try to achieve a better capital structure. Now let's discuss about the synergistic effect. The synergistic effect is an effect that is arise after the synergy happen, which when the merger and acquisition happen, it result in a better performance, and then we can see what will happen for the better performance. For the better performance that the company enjoy. Now, let's look at the example of the synergistic effect from the different type of the synergy. The first one is revenue synergy. So, for the mergers and acquisition companies, the synergy will affect them to a better revenue when the companies combine together. Meanwhile, for the cost synergy, we can say that uh, even though the revenue for both company is not increasing, at least they try to reduce the cost. And of course, they will still reduce the cost because they are focused more on the cost saving. So the third one is financial synergy. When, for example, a middle there are two medium size of company combined together, and then when they combine together the financial performance will be better, so they can apply for some loans, reduce the interest expenses, as well as achieve the tax benefits, and also they can reduce the combined cost of capital.
Hi, Assalamualaikum. My name is Nur Hidayah Mazlan and I am the second presenter. Now we proceed to my presentation. I will explain the synergistic effect in terms of business. First, mergers. Mergers is an absorption of one firm by another. Acquirer acquires all of the assets and liabilities of the target firm. After the merger, the target firm ceases to exist and stop the production. Normally, companies who want to merge are companies that want to take advantage of synergies and build a good reputation. The second point is acquisition. An acquisition is when one company purchases most or all of another company's shares to gain control of that company. Purchasing more than 50% of a target firm's stock and other assets allows the acquirer to make decisions about the newly acquired asset without the approval of the company's shareholders. And the third point is adding substantial new product or service. These usually complement the products and services that companies already have, but it can be completely new range. For example, Company A introduced a new product into a product line to increase the revenue and create competitive advantage. Okay, next I will present synergistic effect in terms of accounting. Synergistic effect of a project should be included in the cash flow calculation where it can be positive or negative. The incremental cash flow can be computed from the two sources, which are from the sales of the new product plus the increase in sales of the existing products. For example, Mak Kia sells fried chicken at Beauty Food Court and her income is 15,000 in 2018. Mak Kia has decided to sell crispy chicken chop. In 2019, the income from crispy chicken chop is 10,500. Meanwhile, the income of fried chicken is 17,900. Below is the calculation for the incremental cash flow for crispy chicken chop. Based on the calculation, there are 13,400 incremental cash flow for crispy chicken chop. It shows the positive cash flow for Mak Kia business. Okay, now we move to the next slide, which is capital expenditure decision create synergistic effect. First, cost saving. Companies normally want to acquire some patents, skilled workers, and technological advancement from target company to ensure the efficient of production processes. This capital expenditure decision helps acquirer to save costs for training employees and acquire new technology on its own. For example, we can look at Siemens and Nixdorf. Nixdorf AG is a computer hardware and software manufacturer and on valuable patents. However, at the end of 1980, Nixdorf AG has the financial crisis. Siemens AG utilized this opportunity to acquire Nixdorf AG. Siemens AG became the largest software and second largest hardware manufacturer in Europe. Okay, the second point is expansion of market power. Capital expenditure decision helps company in expanding of market power by entering new market through merger and acquisition. This helps to increase the market share and build long-term and loyal relationship with customers and also obtain new one. For example, Volkswagen and Rolls-Royce motorcars. Volkswagen acquired Rolls-Royce motor cars and got the professional production technology. The sales of automobile Mobile increased 13.2% for the first 6 months of 1999 and rose 84.7% in North America alone. It able to expand their market power and sustain the growth. The third point is access to experts. When small companies join with large companies, they are able to access specialists such as financial, legal, and human resource specialists.
Assalamualaikum. I'm Najihah Karim and I will continue the presentation on benefit of synergistic effect. The first benefit of synergistic effect is diversification. What is diversification? Diversification is the risk management strategy that makes wide variety of investment within the portfolio, and it's enable the company to invest on various industry. Can you imagine if two different industry merge, and it's help in reduce risk as well as maximizing return on investment, and it's also enable company to share their skill, knowledge that help in increasing their value. The second benefit of synergistic effect is protect an industry from closing. Synergy is benefit in a declining industry for firms are struggling to stay afloat. The new company will increase market share, which help the firm gain economic scale and become more profitable. The last benefit of synergistic effect is greater investment on research and development. So the new firm will have more profit and use to finance more on research and development. So this can lead to producing a better quality of product for a consumer, and it's definitely helpful the company to sustain in the industry at the same time in increasing their value. Next is the limitation of synergy. So the first limitation of synergy is it may increase the amount of debts owned. So the synergy process may increase the balance sheet debts of a combined company. So it can affect a combined company ability to establish a new credit line or borrow additional fund for expansion. This means that the company may have difficulty in obtaining funds due to having more debts. The second limitation is additional cost incurred. So the synergy require both sides is on the same page. If it's not happen, so the amount take time to complete the merger or acquisition process can extend, resulting in additional costs. So this can create to the risk, and probably the risk exceed the benefit of synergy. Next is the challenge of synergy effect. So the first challenge of synergy effect is they can be different in corporate culture that are not easy to consolidate. The different in corporate culture can be difficult to adopt because they are too familiar with their company. Therefore, the synergy will create dissatisfaction among employees to change their original corporate culture. As for example, company A do not have a proper dress code policy. So the bosses allow employee to wear anything if you want to go to the office. As for the company B, they have a proper dress code policy. They need to wear properly if you want to go to the office. So this can create difficulties if a company B merge or acquire company A, and this create difficulties for company A staff to adopt with the company B's policy. The next challenge of synergy effect is the job losses. So the synergy lead to the job losses. So this happen due to the position in the organization are duplicated. So there are chance of layoff could occur in order to minimize costs. So next is an example positive effect synergy in the industry. So this can be seen between Walt Disney and Pixar Animated Studio. So the Walt Disney acquired Pixar Animated Studio on January 2006 for 7.4 billion US dollar. So did the merger work well? So after Disney take over Pixar, so they create hit movie like Wall-E, Bo, Toy Story and many more. So the Pixar also plan for twice yearly film, and they also gain the expert advice from the Disney in term of advertising, marketing as well as merchandising. So this clearly show that the Pixar is doing well due to the positive effect from the synergy. Next is on negative effect synergy in the industry. So this can be seen between eBay and Skype. So eBay acquires Skype for 2.6 billion US dollar because eBay believe that Skype able to provide a better communication platform for eBay in conducting auction. However, the eBay's user rejected the Skype technology because they found it is unnecessary for conducting auction. So 2 years after the acquisition, the eBay sold Skype for the Microsoft. So this merger failure is due to eBay miscalculate its customer demand for Skype product. So that's all from me. Thank you.
Alhamdulillah, we have done with our presentation, and this is our list of references. That's all from us. Thank you for your time and attention.